What's going on, boys? How you doing? Andrew, Hamza. Yeah, Hamza was definitely a good month this month. Very green on the month. Let's give it a couple seconds. People probably logging in. And we'll go over some of this stuff here. There's a lot of stuff going on. What's up, Guggen? How you doing? Not gonna go over a little bit. Why not? There's a lot of people getting very bullish on this rally here from the June lows to the August highs. Usually, as we know, what's up, Nils? Summertime is known for traders going on holiday. Basically, we almost always rally July and August. What's up, G Money? Thank you, sir. Hope you guys had a killer month as well. I know a lot of people at MSL had a great month because they listen. A lot of people online, a lot of people I see in person, a lot of traders I know got very bullish on this. They said options, there's more people trading options, markets reverse quicker, bear markets don't last as long, the economy doesn't matter, stocks go up, blah blah blah. What's up, Gravish? How you doing? But as you know, September and October are seasonally the worst months of the year for the stock market. I've lived through plenty of September, Octobers. They make it look very bullish, usually going into the harshest months of the year, which they did here all the way into August. Huge rally. People were saying if we go over zero point 0.5 of a bear market, then it's over. Just lots of nonsense stats I've seen online. You guys just take a look around the economy, look at what's happening in Europe, look with the gas prices, energy prices, people going bankrupt. It's very obvious we're going into a recession if we're not already in one, to me, and that signals to me that stocks gonna go down. Stocks obviously do not go down in a straight line. It's very hard holding puts when they're short squeezing you like they were in this rally. But when we started October puts back here in about August 25th, or even before that, I think I started puts, held them through some pain as well. But they were for October, it was perfectly fine. Let's get into it anyways. ES did have a, what did we have? I have way too many fibs on this chart. We'll just draw it. See, G Money, this is how I lose all my levels. Then I gotta ask you for them later. But let's get into some fibs here. So 39.83 was the zero point 0.5 fib of this rally, which we were stuck to. Basically, for the last 2 days, we've been just bouncing around. If you guys look intraday, we've been bouncing around that zero point 0.5 fib for like 2 days now. So we had the 0 0.5 fib right here yesterday, kind of held up, retest, held, and today we finally got underneath it. We hit it, held the first time, and then when it lost it, it just completely lost it. End of the day, selling there into month end. I did month end shenanigans. You guys were all warned. What's up, Ricky? How you doing? And let's see where we go from here. Right now, what I am expecting, as you guys know, let's see. Actually, I'm not gonna type in there. There was a oversold indicator that I sent in the group yesterday. It was a little screenshot. It's called NAMO. It's basically the oscillators that big hedge fund managers use, and that is very oversold right now. So it's not a smart decision, in my opinion, to open new shorts here. If you have open shorts, then first of all, congratulations. Second of all, make sure you take enough profits to make that position comfortable for you. I had very heavy shorts in AMD, UNP, and JPM. I did sell almost all of it today. The reason being I do expect a little bounce. I sent the seasonal chart in the group. I've been following that seasonal chart for a while. And if that seasonal chart comes true, then we are going to be very rich at the end of October. Let's see how it works out though. SPY here. We'll go into the monthly candle first of all, because the month just closed for August today. And if you look at that candle, that is absolutely disgusting. Let's pull it up right here. Let's pull it up with the Bollinger Bands actually. So the reason I put up the Bollinger Bands is because of that MACD I have on here. So we have this huge reversal candle, inverted hammer on SPY, rejecting the, I believe this is the 8 or the 13. And the 50-day on the monthly is all the way down at 360. So obviously we're probably not going to get a 30-point move this month, but that is a previous point that we were watching. We got the MACD cross down, you got the stochastics going straight down, you got the RSI slowly going down. Let's check the weekly as well. So if you look at the longer term time frames, everything looks terrible. Weekly stochastics right here on that rally, we took the stochastics from the lower end to the higher end, meaning the momentum is shifting back down RSI is also starting to go back down, and MACD is also starting to curl back down. If you get that cross of the blue and the orange line on the MACD there, confirms more downside. Also the daily, as you guys see, we got very overbought on this rally here. Finally started to dip down, took one last little rip trying to scare out the last weak hands in the shorts, and then we continued straight down for 4 days in a row. We got the MACD cross, we got stochastics are a little bit overdone here. That's the only reason I covered a lot of shorts. I do expect a little 2-3 day, maybe 4 day bounce here where we can reload the shorts for October, but that's my plan. You can have your own plan, you can disagree with me all you want. We'll see what happens. QQQ here, same boat as SPY. You guys remember all those charts we were sending in the group, right? Of SPX and SPY. It's a very clear channel, very clear 200-day moving average, which we rejected. I said, looking back at this, it's going to be the easiest short ever. People were turning very, very bullish. As you guys see here, we have a channel here. We had the 200-day moving average sitting right at the top of the channel. So that's 2 areas of resistance. And we also had the, I believe, the weekly 50-day. Yeah, the weekly 50-day, which is that blue line curling down here, also there. So that's 3 areas of huge resistance right on top. Looking back on it, easiest reversal point. I went very heavy in shorts. I should have went even heavier. That's everyone's complaint always, right? Finally got that reversal, got 3 weeks straight down now, and also take a look at the stochastics on SPX. So the thing is, when you guys are looking at this, I took off a bunch of my shorts because the daily Stokes are way overdone. The 8-hour, the 4-hour charts, they're like way overdone on the RSI. Even the 8-hour, I believe, is getting oversold here. Even the stochastics are beat up, everything. The thing is, you cannot time the bottom with these indicators. The reason being is if you look to the weekly, we can dump for another week or 2 straight and this RSI still won't be oversold. The stochastic still won't be oversold. As a matter of fact, the weekly shows that we're just starting the descent right now. So there's different ways of looking at it. You cannot time it. You just have to take your profits, leave some runners, leave safe positions where you can sleep at night, and that's it. Just go on with it. But for right now, just based on the 4-hour charts, based on the hourly charts, based on the 8-hour charts, the daily charts, at least a small bounce is due either tomorrow or Friday, in my opinion. Whether it goes all the way back to 4,100, whether it goes to 4,200, I have no idea. I will be watching, and if I see my opportunity, I'll reload those October puts. IWM as well, same thing. Daily, clear rejection off 200-day. We closed 1 candle above, 2 candles above, maybe even 3 candles above. Jesus, IWM was stubborn, eh? The short squeezes. Was 199.79. We closed above 3 days closing above on IWM, and then we lost the 200-day. You wanted to see it flag up above the 200 and then continue up for bulls, but we lost it again, went right back under, retested it, and now we're just rolling over. IWM should be a main focus. I will be adding October puts after this next little bounce. If I get what I see, if I get what I want, then I will add more October puts. VIX here, if you guys look at the monthly, let's take a look at the monthly on VIX here. So the monthly on VIX, basically what this is doing is it's setting up a higher base. So obviously VIX usually spikes for a month or 2 max, unless it's like the great financial crisis like 2008 here, just stayed up elevated. Then you had the 2000s where it was up a lot as well, right about here. VIX wasn't well known back here, I guess. Well, 2007-8 financial crisis, VIX went up and it stayed up for longer. And then the end of 2009, or April 2009, when we started going back uptrend, then the VIX started losing those upper, higher highs. That's basically what the VIX is doing right now. You see during COVID, not a big deal. Because COVID was so fast up, they started quantitative easing and it came back down. It actually based out higher. If you notice it right here, around 15 bucks. Stayed over 15 bucks for all of 2021 and most of 2022 as well. And if you guys look back, no bear market has ever ended with the VIX under about 40. We haven't even touched 40 yet on this whole dump this whole year. We have not gotten capitulation, which is what you need to see for a bottom. Capitulation means the VIX shoots up. It means weekly volumes are huge. They start spiking a lot for longer. See 2008 right about here. You guys see all these weekly volumes? That's called people panic selling. That's capitulation. That marks the bottom. And we have not had anything close to that. If you guys look, I'm zoomed out right here. Look at the size of this volume. This is panic selling. This is people selling their 401ks. They're selling their retirement, stock accounts, everything. And once they start selling that, that's when you know capitulation is happening. This is March of last year, COVID. Look at the levels. Look at the volume on this. This is known as bottoming. March 16th to 23rd was the highest sell volume, and then it started layering off. March 23rd to 30th, we started buying. And look at the volume drop off. And then if you look at the chart, let's just look at the chart here. March 23rd, March 16th to 23rd marked the bottom in COVID. And then the next week, March 23rd to 30th, is when they started buying. They started doing QE, the Fed started buying, and we went on an uptrend. So we want to see volume, huge volume. Like I'm saying, like triple what we're seeing right now. We need to see that for weeks and weeks. That will be capitulation. We are nowhere near capitulation right now. So let's see if we get that dump into October like we're expecting here. No, and the UB super weak today. As you guys see, we are straight downtrend on bonds. If they're not buying bonds and they're not buying equities, they're just taking risk off the table here. Going into September, everyone's just getting out. Like they're just going cash. The theory is in a recession, people sell their risky equities and they go long bonds because they're safer. If they're not buying either, that means there's a lot more downside to come here. DXY also just sitting near the highs. The higher the dollar is, the weaker Europe is because it's parity between the two currencies, right? Also, the higher the dollar is, the weaker equities are. So unless we get a big pullback on the dollar very soon, equities are going to have that added weakness from the dollar strength. Also seeing 10-year yields flying at the end of the day here, breaking through that 3.1 level again, closing at 3.183 right now, and the previous high is at 3.497. Through 3.5, tech stocks are going to get hurt really, really bad. Bitcoin looking like absolute trash. Monthly candle will close in, I believe, 3 hours. That's not a chart you want to go long. This is just buying a knife. You guys see big sell volume still coming in on Bitcoin. They're getting out of all the risky assets. They're getting out of bonds. Right now we're sitting right on the 2017 highs here. If we lose that, next level down is all the way down at 12,230, guys. Like on a longer term time frame, shorter term time frame, sure there's more supports along the way. As far as a monthly goes, the next level is down at 12,000s, which is the highs from July 2019. Apple, absolute dump at the end of the day. Looks like fund managers are dumping it into the end of the month. If you look at the monthly candle, it's much like SPX, much like SPY. It looks like absolute trash. Inverted hammer here, couldn't quite get to previous high. And now the next spot down for Apple looks like 130s are coming if you give it enough time. If we get enough carnage in September, October, I think Apple makes a move towards the 145s. Under 145 is 130. Again, I'm talking about bigger numbers. If I wanted to zoom in and tell you guys next week's numbers or tomorrow's numbers or something, then obviously I would zoom in and I would go and look at the moving averages. I'd look at the Bollinger Bands. I'd look at fibs, blah, blah, blah. As you guys see here on the daily, 156 will be a support for the 50-day moving average. On the weekly, we're losing all these moving averages. So yeah, it depends on your time frame, what you're looking at. But for right now, if stocks stay weak, if the economy stays weak, if the Fed does quantitative tightening, all these monthly scenarios are going to start coming into play. We got AMD, we went short around 96 in those October puts. We had this big pattern play out. We had actually 2 areas of resistance on it. I seen the yellow line touch today. I sold most of my AMD. I think I was short from about 96s right about here, August 25th. And just in 4 days, October puts went up just under 300%. It didn't give me the 300%, which would have been $3.20. I believe they hit $3.15 today. I got out of most around 265, 280, something like that. Very happy with my gains. I will be looking to re-short this one after a little bounce. Like I said, I do see the market coming up a little bit. Here is Tesla since the split. I believe we split on August 25th here. And there's been not a single green day. You see a green candle here, but that was such a big gap down that it closed a little bit green from where it opened, but even that day we were negative on the day. So about 5 straight green days since Tesla split, much to the same as Shopify did when it split, right about here. So it went down 3 days straight. You got Amazon when it split, almost down for like 2 weeks straight, and you have Google when it split. So since Google only went down the same day. Almost every single company goes down when it splits. So it's a very easy trade to short Tesla. The premiums are a little bit high, so I was more excited about October puts more than short-term puts. And those all paid me very, very well, so I'm not disappointed at all. Here's UNP from the bottom of the rally to the top of the rally. Easy fibs, easy 200-day. We reclaimed it here where it tried to scare me out. I got back into the puts, I believe here. Those puts went up like 100% in 3 days, and they had 2 months on them. So it was very easy plays, very stress-free, where I can actually go heavy. The reason being I have time on them, I can adjust them, I can add to them, I can do whatever that I want with them. And they're not going to stress me out after one green day. So next on UNP here, I do think railroads have a big problem in the coming months. They have some material issues that they need materials from Ukraine that they're not getting. They only have about 33% of the workers they actually need. They fired the rest of them, and it takes a while to train these people. So there's a lot of trouble in railroad land. There's a lot of articles that I read. You can search the Discord. They're probably in there somewhere. I know you guys don't read half the stuff I send anyways, but they're in there. And we got 222 next, and then 217, and then after that 210. So I had 210 puts for October. Probably going to roll those out on the next bounce. I'll probably get 210s for November or something. Let's see. JPM as well. Ugly banks. Banks actually held better than tech this week, but if you look at the monthly candle here on JPM, I wouldn't call that a doji. It's not in the middle of the body. I don't remember what name that is, but what you see here is we retested the 50-day on the monthly. So this is the 50-day moving average on the monthly at 123.77. We retested it. We got to 124.24. And a clear rejection and close under. So that's the monthly candle there. Not too bullish. I'm just being nice, but it's not bullish at all. Here's the weekly candle as well. Inverted hammer after inverted hammer after inverted hammer. So we are below the 8-day on the weekly. We're below the 200-day on the weekly. We're below the 50-day on the weekly. All the moving averages are starting to curl down here. If the 200 starts curling down here as well, JPM has a visit back to 106 at least, and I will be looking to roll out all of these puts, my JPMs, my AMDs, and my UNPs, and I'll probably add IWM to that list this time. Here's Netflix. This one was given in the newsletter. I gave the levels this morning. It was looking bullish this morning. I have no idea why. It was going up while everything else was going down, and it just wanted to go and visit the fib to squeeze out some late shorts, and then it went straight down for the rest of the day. Netflix monthly also very, very ugly, as you guys see here. Straight, I can't even see that. Let's get rid of it. G-Money will have my levels anyways. That is an ugly candle right there. So what is that candle? Looks like I don't even know what to call it. It looks like a doji kind of. Maybe there's a special name for it. Maybe a dragonfly or hanging man or something like. It's not a hanging man, sorry. Dragonfly, gravestone, something like that on the monthly on Netflix. Looks disgusting. It's just like the last chart, just like JPM. It's below the 50, it's below the 21, it's below the 8-day. Only thing that's left is the 200-day moving average on the monthly below it, which would be at 142, which is about 80 points down from here. We got the weekly below all the moving averages. You got the 50-day crossing below the 200-day on the weekly. If this was on a daily, that's called a death cross. It's on a weekly. I'm not sure they have a name for it, but let's call it the death cross. That means there's a lot more downside probably. And the weekly candles are just disgusting, man. Everything points down after a little tiny 2-3. Since we're option traders, we need to know the daily trades, right? Also, we need to know the macro picture where we're going. All the longer term monthly, weekly, daily charts are screaming lower to me. But the 4-hour, 8-hour, 1 hour, they're all oversold. So we're going to see if we get a little tiny relief rally here to load up more puts. The one thing I am not bearish on is this oil. So PBR, beautiful setup, huge dividend, equities tucked away. I will probably never sell. Usually my only dilemma is in a recession, oil goes down, but this is a weird recession. We don't have enough supply. They're getting rid of strategic reserves, and oil is in high demand. And Elon Musk has spoken about this, about how we actually need more oil for the next 10 years while we switch to electric vehicles and solar energy. We actually need more oil right now. Warren Buffett is literally buying out a whole company. And these charts like Oxy, PBR, if you look at the daily, we're going from bottom left to top right. That's what you want to see, an uptrend in a stock to go long. You don't want to be buying a stock that is, I'm not going to put that one, that's going to hurt my heart. RBLX here, look at this. You want to go long on RBLX, that's trying to pick a bottom. We're going from top left to bottom right, that's a downtrend. You're going from top left to the bottom right, that's a downtrend. You're trying to pick bottoms here on Twilio. These stocks can keep falling, guys. They'll fall to levels you can never imagine. You think Twilio at 69 is a good deal? Wait 2 months, you'll see Twilio at 40 bucks, and then you'll think it's a good deal as well. So what I'm saying is buy stocks that are going from bottom left to top right, which is commodities. There was little dips along the way, but these stocks, all the commodities have held up. That's CCJ, that's uranium, that's BTU, that's coal. Obviously, energy is a big problem in the world right now. So focus on the stocks that are going up. Oh, forgot to add the last U, sorry. It's another uranium name. If you zoom out, it is from bottom left to top right. That's an uptrend. Those are the types of stocks you want to be buying right now instead of bottom picking. FedEx was my signal. If I hit the 200-day weekly today, I had my alert right here. 209.55 is the weekly 200-day on FedEx. If we hit that today, I was probably going to take some shots long today for a short-term relief bounce. But as it occurred, I just made all my puts free for October, and I sat pretty empty on the long side. I did try a snow long this morning. The reason being was on my seasonal chart, it was showing me either today or tomorrow or maybe even Friday was the beginning of the relief rally. I thought yesterday would have been the end of the selling. This morning we started out strong. Certain stocks were holding up. Certain stocks were going down. As you see here, we were holding the 21 and the 8-day all this morning, and then all of a sudden SPX rolled over and snow rolled out along with it. I stopped out on this candle right here. Didn't work. I'll wait for tomorrow or Friday and we'll see what happens. Bottom left to right thing. So KB, it's basically just trend following. When a stock is uptrending, it's going from the bottom left of your screen to the top right of your screen. When you're trying to pick bottoms, you're seeing a stock that's going from the top left to the bottom right. That means that stock is in a clear downtrend. If you zoom out on the weekly or the monthly, you'll see what I mean. Right now we did have a big bounce, so some of the charts are confusing. This is a monthly chart for snow right here. This is very obviously top left to bottom right. That's a downtrend. You don't want to be buying stocks like that. You want to be buying stocks that are going bottom left to top right here, like Oxy. Other than that, I hope you guys had a great month. I do expect a lot more volatility in September, October. RBCN. I don't even know what that is, but we can do that. I hope you guys expect or at least are ready for a lot. I don't know what the hell this is. Rubicon? Is this that mango juice that India sells? Looks like we just, that's a split? They split their stock. I think they split their stock. I don't know enough about this stock to give an opinion, but that chart looks disgusting. I don't know if that's a split or what they did. What did they do? They paid a dividend and they went down that much. Ugh. Look into it and get back to you, Mr. Tripp. But I hope you guys had a great month. September, October are the worst seasonal years for the stock market. Don't get too excited about getting long right now. Even if you're eyeing a chart or a stock, I would recommend waiting until at least mid-October, which is where I'll probably take a couple nibbles at a long. I did give my targets in the premium chat. I told you guys SPX, I think we make new lows on the year in October, which would be underneath 36.39 for anyone that's wondering. I'm 36.86.87, sorry. That is the low on the year. I think we get new lows in October. That's where I'll start nibbling on maybe some tech stocks. And if it goes down fast enough, I will load the boat long, just because that's what I do when it goes too far in one direction. I like going the other way. Other than that, thank you guys for attending, and I'll catch you guys tomorrow.